appreciate being able to talk here today. Like you said, we've been back in town for 10 years this coming July. It's been very fast growth, very exciting, but also very rewarding to be involved in this community and just get to know people and build these relationships that we've built. I served on the council for 5 years, which was an experience for sure, but a rewarding one as well. Definitely can be trying and can be get on your nerves and create some stress, and I can attribute some of the hair loss and gray hairs to that, but the rest go to my kids, that's for sure. But today I wanted to talk to you about with the CPA firm, formerly known as the CPA firm, now we're known as JCG. We changed the name to JCG because we're going to start offering other services, having other products, and things we can do. So it really is going to allow us to grow better and to provide certain things that we can't do under that CPA firm name. But today what I want to talk to you is about some tax changes that are coming up for the next year and how those relate directly to investment and growth here in El Dorado Springs and other rural communities. I know we're mostly business people here, and so I'm excited to see some of these changes coming, but then some of them are just changes that you need to know about. So one thing I want to get into is bonus depreciation. Most people know what depreciation is, and for the last 5 years we've been blessed with 100% bonus depreciation. That means if you buy a car, if you buy a piece of equipment for your company, you get the option to write the whole thing off that first year, okay? Sometimes that's an option with Section 179, but we've had the option to do it with depreciation, which is significantly better. That's changing. It's starting to phase away now. So now this year it's dropping to 80% instead of 100. Next year it'll start going down even more over the next 5 years, back to 0, and then we'll be at normal depreciation or Section 179. The difference there is if you use Section 179 to write it off, you have to have a profit in the company. It can't create a loss. The depreciation can. And so it's been a stimulant for the economy, and it's been a really good thing. However, it's starting to phase away. Another thing I want to talk about with depreciation, since we are here at the end of the year, one of my most common ideas from my clients that comes in, they want to write off everything, right? They want to pay no taxes. They want to go buy large pieces of equipment. They want a brand new truck. I hate to blame my farmers, but it's usually the farmers. They want a new tractor. They want a new combine. But they use the motivation to save taxes, not necessarily to make it a good business choice. So I try to encourage them to think about it from a business perspective instead of just spending that money. I mean, brand new truck today that works on a farm, a 3/4 ton, you're spending $80,000 pretty easily. New tractor, a couple $100,000. And these are major business decisions that shouldn't be made just so you don't have to pay taxes this year. Potentially, you make more efficient use of that deduction. You buy it when it's the appropriate time for your business, and you write it off also when it's the appropriate time for your business. And if you have to write a check to the government that year, that might be okay. But let's smooth this out over time. Let's consider the whole picture instead of just this year. So I tend to have a contrarian opinion on that from my clients at least, but I try to educate them and make them understand this might not be what's best for you in the long term, so let's think long term as well. Another exciting change that's coming this year is recently there's a new act that went through Congress called the Secure Act, and now employers can set up a 401k for employees, and they can get a credit per employee for the amounts that they match the employee. So for instance, if the credit is up to $1,000, if you have a $35,000 employee and you have this plan set up and the employee puts in $1,000, you also match that, but then the business gets a credit on their tax return for $1,000. So effectively it was free to the company, and the employee still got the benefit. You still got that relationship with your employee, that benefit that you can give them. It's a good way to attract new employees. Now it's mostly for small businesses, so under 50 employees is the full credit. 50 to 100 it starts to phase down, but over 100 it's not available. Yes,
Does that
Joshua?
include simple plans too, or just 401k?
It's 401k. So whatever your investment advisor is can potentially help you move from the simple to a 401k. We're actually doing it at my firm to take advantage of this and to have a better benefit for our employees. So there's some upfront cost, but in the long run, it seemed to save us a lot of money. And that, I believe that goes for 5 years that you can do that credit. So I don't have all the specifics, but your investment advisor would. So it's another exciting thing to invest in our employees, because you guys know when you invest in your employees, you're investing in your business and your community. And like you said, this community is growing, and it's very exciting to see the growth. We want to make sure that people want to come here, want to live here, and we can provide them good jobs with good benefits. Another idea that I've got, and it's something I've researched more, this isn't a new tax rule, but it's really important, and it could help with the investment in our small communities. We have a lot of real estate and business owners around here, and one of the options that you can do is a self-directed IRA, and it's actually pretty interesting. You can start a business, put it in the IRA, grow the business, and you basically grow it tax-free. There are a lot of, and it has to be brought out of retirement. There are a lot of nuance to this and a lot of ins and outs, but it's a really exciting piece to where some of our landlords around here, or our small business owners, or just someone that wants to invest in a small business. Because what we run into in this community in particular, you need someone to invest in you. If it's a bank or if it's an individual, they can invest in their local community with a tool like this. So there's way more detail on this than I have time for today, but I wanted just to mention it, that it's something that I've researched a lot and learned a lot about and could help someone set up if they need it. Another thing that's coming up, I'm sure everyone's heard about the employee retention credit that happened through COVID. It was a credit on payroll taxes, and it was up to $26,000 per employee per year for 2020 and 2021. The reason I bring this up is because the deadline is coming up. 2020, some businesses qualified, and if they did, that deadline's coming up April 15 of 24. The 2021 quarters, that deadline is actually another year, 2025. But you might have got some spam calls about this. There was a lot of inappropriate returns filed and credits taken. The IRS actually put a moratorium on filings, and they sat on it for 3 months so that they could iron out the kinks. They're getting ready to fire that back up in January. So that's another thing that we can help with. We would definitely need to consult with you and see if your business qualifies before taking any steps. But it's something that we do at the firm, and it's something that could benefit and could give back a significant amount of money, depending on how many employees you have. The last thing I want to talk about is actually not done yet, but it's really exciting if it happens. There's a new House bill, and it was part of the Small Business Jobs Act. And it was actually proposed by our Missouri representative, I can't remember his name, Jason Smith, possibly, has put it into the system at Washington. And what they're trying to do is expand the opportunity zones. So opportunity zones came out back 5 years ago when we had the Tax Cuts and Jobs Act in 2017, but they didn't get a lot of notoriety right here because the problem was it got pretty political. Basically, each state governor, so I don't want to throw anybody on the bus, but the state's governor chose which zones and which counties in the state would qualify. The intention behind these opportunity zones was to encourage investment with real estate and business in those zones. However, we didn't qualify. And by all logic, I would think Cedar County, Vernon County, all these areas in this rural area would qualify. This is where investment should be. Well, when you look at the map currently, they're in Kansas City, St. Louis, Columbia. I'm not even sure if Springfield's one. The zones didn't make a lot of sense, but they had to choose a certain number, and I guess whoever had the best lobbyists got the zone. So the point of the zone, what happens is, if someone has a capital gain, like let's say you sell a piece of real estate, there's $1 million piece of real estate, and you have a $500,000 capital gain. You can invest it in one of these zones, you leave it in there, and it can grow, and if you leave it in there for a certain period of time, it can actually be tax-free. So that $500,000 can become tax-free, which is a very big deal, especially with someone that wants to invest a lot of money. We see this on some of the upper levels. Tractor Supply could come to mind, or other businesses like them that want to invest, and they have these large capital gains because they are consistently investing in these small communities. Well, the exciting part, let me get back around to this, is that this bill that's been put in with the Small Business Jobs Act will expand those zones. It's called the Rural Opportunity Zone insertion of this act. If they do that, it will be more on stats, not handpicked by a politician. It would be, do you qualify based on median income? Do you qualify based on demographics? If that happens, we would qualify, 100%. And then, as a community, or as me as a professional and a representative of this community, I can sell that to people to come to this town, to invest in this town. It's not made its way through anything yet. It's been proposed, it's been brought to the House floor. That was in the summer, and you guys know these things take time. I was really hoping that at the end of the year we'd have some answers, and I really wanted to speak about it here because it ties in so well. But we don't have any answers yet. That's something I'm following constantly because as my profession and as a CPA, I want to be able to help people with those, but not just that. I care about this community and I want this community to grow. I think I've shown that through my interaction and just through my own investment in this community, and I believe it's a good place to be. And I love the stats that we got from Tractor Supply that they didn't necessarily want to come here 5 years ago, but that was just 5 years ago. Now it's a place that seems to be booming. You know, my wife's in real estate. We see people coming from other areas and moving to this town. We see people coming from the city. What Sac Osage has done with the internet really is a game changer for everybody, allowing people to work from home and live in a place like this. So I really think that this community is heading in the right direction. I think the sidewalk project is very important. Many of you know I live downtown, so I walk my kids downtown, I go for walks downtown. I'm in downtown. I see what it is. I see the good and the really bad. And it is tough to watch a single mother walking in the cold with her stroller, trying to walk up any sidewalks, trying to get to woods, because that's her only option for a grocery store. So my personal investment would be to get some kind of convenience store downtown, something on the north side. But if we can't do that, let's fix this sidewalk. Let's make this a little easier. And I know there's city transportation, but many of them, that's just their only option is to walk. And a wheelchair won't go on these sidewalks, a stroller won't go on these sidewalks. We need to fix this as a community. So I believe as we grow, we also need to remember our downtown and our north side. I'm sorry, that's not part of what I wanted to talk about today, but it is important to me, and it's important to this community because that's where our people live. And I think if we take care of our people, we will grow as a community, and we will continue to get better reports and stats like Tractor Supply gave us, and we'll get more business here and more long-term residents here.